Ring the bell, sound the alarm, call your grandma.
Because the stock market just hit a brand new all-time high. Chef's kiss type of a situation. In all reality, if you want to be nice, you should probably check in on your local contrarian bear because they are getting squeezed the F out of their position. In this video, I want to explain why seemingly everything is in pump city mode. I want to touch on why I think there's more fuel left in the tank, i.e. why I think we still have higher to go. And I also want to give you an update of what's been going on in my own portfolio. If you checked in on this little mini series, you know about last week, I blew out roughly $30,000. I don't like to say it. It's very painful to relive. It's really even painful to talk about, but slowly and surely I've been building it back. So I want to let you know what I've been doing for some positional management and also some new adds to the overall portfolio. Excited to share that with all of you. But before we get to that, if you enjoy these type of stock market breakdowns, don't forget to like, subscribe, turn on your notifications, all that good jazz. And with that being said, let's roll the tape. So by the time the bell went dingity ding 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 today, Tuesday, August the 12th, here was the official headline. S&P 500 and NASDAQ both notch record close as inflation report gives Fed green light to cut rates. So that's why we keep pumping. Right here, the hot news was basically that we had a cool inflation report, and now the odds of, or at least the perceived odds of a rate cut are starting to spike. In fact, the exact odds of a rate cut at the September meeting, a 25 bips rate cut, is now 94% chance. And even if we fast forward to December, there's about a 50% chance by then we'll have a 75 bips, like cumulatively in total, a 75 bips rate cut. So the TLDR is it's perceived that money's about to be cheaper. The economy and businesses love cheap money, so that's why we're starting to pump. With respect to the actual numbers related to inflation, you could see that the year over year came in at 2.7 when the expectation was 2.8. That's the cooler than expected number. And if you looked at the core as in taking out food and energy, we actually came in a little bit hot, but apparently the market didn't care at all. In fact, it just focused on this first number because as soon as it came out, that's what every single headline read. Inflation held steady at 2.7% in July, and that was enough for the bull camp to say, you know what, hold my beer, it's time to start another round of pumping. And that's exactly what happened. The S&P 500 gained 1.1%, notching a new all-time high. All day, the options market was just going nuts. The short term and the all expiration, the delta was just ripping. The NASDAQ also notched a new all-time high, gaining 1.33%. As you can see here, the NASDAQ delta also pumping. And then even looking at the Mag 7, similar situation, just bottom left, top right, really, really moving. But you should know it wasn't just for the world of equities. Even crypto looking pretty good. Bitcoin up about 1% as I'm filming this, around 120,000. It's currently holding the breakout. And even though it's not the exact same thing, the closest options contract we have to track it is IBIT, and you can see the same general vibe. Bottom left, top right. We're seeing not only optimism in terms of price structure, higher highs, higher lows. Obviously, at a new all-time high, you're going to have positive momentum, but we're also seeing an agreement in the options market where people are buying calls, selling puts, adding a bunch of positive delta to the system, as in we have a supportive move to the upside, which thankfully, at least for me, means my degenerate bets are paying off. You know, early last week, I took a huge hit around $30,000. So instead of being short, owning puts, I decided to flip it up, revenge trade, and I got into a lot of calls. And hey, was it a smart decision? No, but was it a profitable decision? Without a doubt. So coming back to the S&P 500, if you've been watching these videos, you know this was my play, but you know that I had 40 contracts, as in I locked in half my profits today, locking in a roughly $7,000. So once again, that's for the S&P 500. Then I took a super degenerate bet on the NASDAQ, but I did it on a leveraged NASDAQ. And right here, I had 75 of these, so I sold 40 of them, meaning I locked in around another 12,000 there. So 7 on the S&P 500, 12,000 on the leveraged NASDAQ play. So that's around 19,000. And then also here, I didn't lock any in, but I just want to let you know that I'm still in my leveraged Bitcoin play. But once again, that is all unrealized right now, up about another 10. So if I were to lock this all in, I would be looking good, as in I already dug myself out of the hole. But as you're about to see, I actually am playing a little bit more degenerately. Now, before we get into the entire portfolio reveal, there is something I want to say. Big shout out to public.com for sponsoring this portion of the video. You've probably heard me say it before, and you're most likely going to hear me say it again, but if you're trading options and not using public.com, you're probably leaving money on the table. Public is one of the most cost-effective platforms out there. No commissions, no per contract fees, plus they pay you a rebate on every stock and ETF options trade. That's right, you earn between 6 and 18 cents per stock and ETF contract with higher rebates as you trade more. If you ask me, that's all great, but now the platform is even better. You could build a multi-asset portfolio with stocks, options, crypto, and bonds all in one place. You could take advantage of their tools, including a real-time options hub, a customizable chain, smart strategy builder, and even a queue so you can prep multiple trades and fire them off when they're ready. And for my systematic traders, Public's free trading API gives you full read-write access so you can automate your edge without paying a cent in commissions. If that sounds good to you, check them out at public.com/Kohrs or hit the link in the description and you'll quickly learn why Public is my favorite. And of course, thanks again to Public for sponsoring the Goonie community. Once again, another shout out to Public. You guys should know that I'm not just saying it to say it. Of course, I love being partnered up with them, but it's for good reason. This is legitimately my favorite brokerage to be trading options on, and that's exactly why I trust them with $300,000 of my own money. But anyway, enough with that. You can see I had a very good day, up about $35,000, and here are my positions. Like I said, I sold just over half of the TQQs, and then I sold half of the SPYs, and I'm still fully swinging BITX. That's the position I've had for a bit. Same thing on Netflix. Broadcom is a new play, already up about 4K on that. Robinhood, I've already been swinging that. That's about 3K, and Meta is also a new play of the day. So even though I locked in some, I saw other opportunities that I wanted to take advantage of, and thankfully, fingers crossed that they're already in the green, and hopefully we get a beautiful gap up for me to really monetize on that. But as you know, I already locked in around 19,000, and unrealized, we're looking good. 11, that's going to be around 20, 27, that's going to be to 32, 36, 39. Really, that brings us to just over 40. So I locked in 19, and I have another 40,000 unrealized that if I were to close it all out, that's exactly where I'd be at. So I've actually almost doubled up on my loss from next week. So thus far, looking swimmingly good. So now that you have an idea of how I handle things and what I'm seeing, let me give you a little bit more context for today specifically, because it really will help us figure out the highest probability pathway moving forward. So overall, here's the intraday movement. We had a little bit of a dip this morning, and then we basically ripped all day with Meta, Palantir, and Broadcom really taking the, I guess, gold, silver, and bronze place metals on the day, looking very, very good. I do want to cover why we had a little bit of a dip this morning. It related to Trump. Trump threatens Fed Chair Powell with a major lawsuit, demands interest rate cut. This was on his Truth Social right at 9:45 this morning, but basically saying $3 billion for a job that should have been $50 million fix-up, not good, and saying that he's open to a lawsuit. So the markets didn't know how to react. And when I say the markets, the bots interpreting this didn't realize that it was just Trump being verbose Trump. So eventually things calmed down, people bought that dip, and then we ripped to a new all-time high. You should know that it wasn't just one sector, the entire heat map of the S&P 500 looking like the green goblin right now. So it was very hard to miss. Yes, there are some individual red plays, but overall, it's pretty much a green paradise. And now for the most important question, what in the world is coming down the pipeline that we should be paying attention to, and what are the probabilities of going up, down, and sideways? Well, Wednesday, August 13th, there's nothing really too special scheduled, but you should know that there's another inflation report this Thursday, the producer price index. So we got the consumer price index today, and then to close out the week, Friday, August 15th, we're going to be getting retail sales. So obviously, pay attention to that. Please also understand we're technically still in earnings season. The last major one that people are going to be paying attention to is Nvidia. That's not this week, but hey, if there's something that you're trading or invested in or even interested in on the screen, like I said, feel free to screenshot this or just go to @eWhispers on Twitter. With respect to seasonality, the rest of the week is very, very bullish. Right here, Wednesday, leaning bullish. Thursday, leaning bullish. And then Friday is straight up bullish. Now remember, seasonality is not the end all be all, but if you already have a bullish position and you know you're being supported by tailwinds, well, that's a little bit, you're going to be a little bit more comfortable. Once again, not the end all be all. You have the odds right there. But for the remainder of the week, the bulls on a seasonal perspective are in control. I should also note that it's not just seasonality. If you take a look under the hood in the options market, you're going to realize that there's more calls than puts with respect to open interest on the S&P 500 every single day for the remainder of this week, especially on Friday. I also want you to know that the big boys were buying like no other. This little light blue line that represents large players, and you can see starting around 11, they were buying, not looking back. So we have large buyers purchasing in the overall New York Stock Exchange. We know the options market is call dominated for the remainder of the week. And we also know that, surprise, surprise, bullish price structure, higher highs, higher lows. We are bullish momentum. And then the options market dominated by the bulls. And that's not just for the S&P 500. Arguably, that's true for the NASDAQ. And I could even say that's a fair argument in the world of crypto, specifically Bitcoin. And for the final part of this act, let's talk about potential price targets. So check this out. How incredibly cool is this? The SPY closed today around 642. Well, guess what? After taking out this resistance at 639, the next major thing was 642, exactly where we closed. Now, if the SPY is able to push it, well, the next thing I'll be watching is 646. That's where the options players are at. And honestly, in reality, this is why I got out some of my position, half of it on the SPY, just in case this is too much of resistance. And then looking at the Qs, we ended up closing at 580. Guess where the giant thing is? 580. Surprise, surprise, the market is reacting to major levels, not only in terms of people's inherent positioning in the equities market, but also the massive positioning that we're seeing in options. So right here, 580, we ran all the way up to it. As soon as I saw that, that's exactly why I decided to lock in some of those profits. Now, if we can exceed it, I'll be looking at 582, followed by 588. But right now, that's a clear gamma level that I'm paying attention to. Obviously, the entire situation by definition is dynamic because the entire market is just a bunch of people making a bunch of decisions day in and day out. But right now, I'm just trying to review price structure, price momentum, and the overall option setup to give us an idea of the highest probability pathway forward. So do I believe that we can keep going? Without a doubt, but a little bit of a caveat, a little bit of an asterisk to pay attention to these major open interest levels, because you never know how the people who are holding those contracts are going to decide to react at those levels. So mark them down, write them on a cheat sheet, do whatever you need to, but pay attention to the major open interest, gamma, and delta levels, especially as we go into Friday's expiration. That's what I have for you. I hope you're making a buttload of money. Of course, if you have any questions, comments, or concerns, let me know in a comment below. I will get back to all of you. I appreciate all the good vibes. I'll catch you in the next one.